The latest numbers are out, and to no one's surprise, the Toronto real estate market has cooled further. But what is surprising is that Bank of Canada, as of recording of this video this morning, just announced that they're not increasing interest rates and they're maintaining the rates at these current levels. So in today's market report video, we're going to cover the numbers you need to know with regards to the GTA and Toronto real estate market. How has it exactly cooled? Where are prices? How many listings are coming onto the market? And furthermore, we're also going to discuss what the pausing of the rates mean going forward for the Toronto and GTA real estate markets. Hello everyone, this is Sam from SaberiSixRealEstate. Welcome to the channel. If you're new to the channel, on this page we like to discuss all things having to do with the Toronto and GTA real estate market stats, market reports, market trends, buyer advice, seller advice, area analysis, condo reviews, and property tours. So if you find any of this content enjoyable or informative, feel free to subscribe, to follow for more, or feel free to get in touch with me. At the end of the day, I am an active Toronto and GTA real estate agent working on the behalf of buyers and sellers. So feel free to contact me with the information on the screen or in the description box with any further inquiries or questions. So let's get to the report. And as always, let's start with the most major categories. Of course, off the bat, one thing that everyone is always interested in is the average price, that big headline number. What is the average price across the GTA? So according to the latest market report for August of 2023, of course, at the time of recording of this video, it's September 6th, so we don't have the September numbers in full or even a quarter available to us. The average sold price across the GTA has dropped. The average sold price across the GTA is at $1,082,000. This represents a marginal 0.3% increase in average sold price year over year, because in August of 2022 the average sold price was at $1,079,000. But in reality, and if you recall in my previous market updates, I said that when we come to August, I wouldn't be surprised if we start seeing a year over year decline in terms of the average sold price, because in the July report and the June report we start to see a month over month decline in average sold price, but that year over year percentage increase for average sold price across the GTA was slowly diminishing, and now in August we have it where it's nearly flush. I mean, a 0.3% increase or decrease either way is non-consequential. That's less than 0.5%. So although yes, technically prices are still up, for in all practical senses and purposes we can think of the market as pretty flush with last year. But that is on a year over year front. When we take a look at this August figure compared to July of 2023, we see that prices have declined. There's no question about that, because in July of 2023 the average sold price across the GTA was $1,118,000. Now once again, to reiterate, we're looking at $1,082,000, but July itself was also down from June. Here I've put on the screen average sold prices across the GTA since January of 2023. And we see across the GTA real estate market, prices have been on a steady decline since May of 2023, and May of 2023 and perhaps the last week of April across all property types can be looked at as the peak of the market so far in 2023. Now, of course, prices in August of 2023 are still higher than what we saw in January. In January, the average sold price was $1,038,000. And when we expand this chart to show from November of 2021, the average sold price on a monthly basis, we see that prices really bottomed in Q4 of 2022, mainly October, November, and December. So prices are still higher than they were in Q4 of 2022. Nonetheless, though, they're on their way down. But what was surely down was sales, because with regards to the Toronto and GTA real estate market in August of 2023, we saw a total amount of 5,294 sales. This represented a 5% decline year over year. In August of 2022, total residential transactions were at 5,584. And as I've been saying for a long time, this drop in sales can be attributed to both the supply side and the demand side. Look, look, the higher interest rates have had a diminishing impact on both sides of the spectrum. Buyers have moved with caution, not all buyers, but a lot of buyers, especially those who don't have a significant amount of cash to put down, they're buying with 20% or less. Well, they've been moving with significant amount of caution. They've either been waiting for prices to keep dropping, or they're not going to get involved in the market when rates are so high. At the same time, on the supply side, well, the dropping prices and current market conditions haven't had the impact that a lot of people anticipated on the supply side yet. Of course, August is typically a very low supply month, but especially since last August, sellers are less likely to list their property, even though they have seen an increase on their monthly payments, because for most sellers, if they have to list, first and foremost, to repeat again, they have to expect a cooler market with prices down. They're less likely to list in the first place. And secondly, most sellers, when they list to sell, they would have to buy, and they would rather kind of keep the property they currently have, as opposed to get involved in the market from the buyer side again, have to go through the pre-approval process with such higher rates. So interest rates have kind of diminished and capped demand and supply. And it's no surprise to me that sales are significantly lower than last year. Maybe significantly is putting it a little bit too strongly, but nonetheless, 5% is nothing to sneeze at. And although they were down 5% year over year, compared to July of 2023, they were up barely. They were up 0.8%. Anything less than a percentage point in the 0.8s, 0.7s, 0.5s, we're really talking about negligible increases or decreases either way. Because in July of 2023, there were a total of 5,250 sales. Now I'm going to do the same thing I did for the average sold price and show you sales so far in 2023 since January. And once again, in similar fashion, we see that August sales are still higher than January and February, but down from March and April. The biggest drop in sales really occurred from May to June and June to July, down 16% and 29%. Now, before I touch on with regards to both sales and prices, what to expect in September of 2023, both from the buyer's perspective and the seller's perspective, let's quickly touch on inventory figures, because inventory really drives a lot of movement, both with regards to the category of sales and category of prices. Because in terms of total new inventory, total new properties coming onto the market in this given month, August, or any given month, we see an increase of 16% year over year. That's right, a total of 12,200 or so listings came onto the market in August of 2022 that were not on the market previously. And this represents, once again, a pretty significant increase year over year, because the total new listing figure in August of 2022 was around 10,000. So this is good news. It's not as good of a news as you would think so, and I'll elaborate upon that in a second, but it is still undoubtedly positive movement. 16% is healthy. We need more inventory. Buyers definitely need more inventory, those who are actively looking right now. So once again, it is good news. However, it's not as good as you would think, because the standard is way too low. Because August of 2022 was historically one of the lowest non-January inventory months in the most recent history of Toronto and GTA real estate. Fact of the matter is, 12,296 new listings right now is considered a victory or a positive sign. But unfortunately, even as recent as 2021, 2022, February, March, April, June, July, the inventory figures were so much higher. They were upwards of 18, 17, 19,000. A weak month would have been around 15 to 16,000. And I would venture to say the last real strong inventory month we had was June of 2022. Even May and June of 2023, when the market was hot, it was really seller friendly. Some buyer competition was returning to the market. Properties I was selling and my colleagues were selling above asking with competing offers. Even when that was occurring in May and June, inventory at best was still, in terms of new inventory, once again, not active, new inventory was at best around the high to mid 15,000s. I mean, March of 2022, when total new inventory was 20,000, seems like a different world to me. And that wasn't even that far back. Of course, it was before the Bank of Canada started increasing interest rates, which we will touch on. So let's quickly take a look at sold prices by property type and by area. As you guys can see from this chart on the screen, we have sold prices for the 905, we have sold prices for total GTA wide, 905, and 416, along with sales. To start with the total column in terms of average sold prices, all these average sold prices, detached, semi, townhome, condos across the GTA. So not the 905 breakdown or the 416 breakdown, but the total column. all these sold prices are actually down on a month-over-month basis, although of course, as you guys can see from the chart, up mostly on a year-over-year basis. The only property type that's not up year-over-year is condos, but it's marginally down as 0.9%. So once again, to remain consistent with the logic, we can think of it as pretty flush year-over-year. But townhomes are up 3.9%, nearly 4% year-over-year. Semi-detached are up 6.9%, nearly 7% year-over-year. And detached, once again, are up 2.8%, so almost 3% year-over-year. So all these home types, with the exception of condos, are up year-over-year. But on a month-over-month basis, all these sold prices are down. So for example, detached, we see an average sold price of $1,427,000. This represents a marginal decrease, to be fair, but a marginal decrease of 0.76%, so it's pretty flush. Condos at $705,000 are down 4% on a month-over-month basis compared to July of 2023. Semi-detached is also down at $1,067,000. That represents a drop of 3% compared to July of 2023. And townhomes, which came in at average sold price of $935,000, are also down to the tune of 2% on a month-over-month basis. And when it comes to sales figures, when broken down by the 905-416 and once again overall GTA wide, we see that detached and semis are down on all fronts. Detached, for example, down 12% respectively in the 905 and the total figure, down 11% in the 416. The sale of semi-detached properties down once again 12.7% in the 416, 15% in the 905, and 14% overall GTA wide. But townhomes and condos have ranged from pretty even with last year to significantly up on a sales front. So this clearly indicates to me that in this high interest rate environment where even sellers are a little bit apprehensive obviously about listing due to the lower prices, what's going on market more are the lower property types, namely townhomes and condos. Of course, there's a ton of variation. That should be obvious. You know, a condo in Yorkville is completely different than a condo, for example, in Scarborough. Same thing with the townhome. You have townhomes selling upwards of $2 million, you know, at Yonge and Eglinton. Then you have townhomes you can buy for $780,000 in Whitby. But the point is, on average, as a whole, it seems as if townhomes and condos are more bountiful in terms of total share of supply, which is not surprising and is typically the case anyways, but it seems as if these current market conditions have exacerbated that trend. But quickly, I want to take the time now to shift towards what's going to happen going forward with regards to the Toronto real estate market and the GTA real estate market in September of 2023 and potentially towards the end of the year. Well, of course, as I mentioned off the top, this morning, the Bank of Canada was set to meet and make an announcement with regards to the interest rates. And to my surprise, I will say personally, they actually did not increase the interest rates. I personally anticipated in my market reports and my predictions that they would actually increase interest rates this morning, but they didn't. They maintained the current rates as is and decided to go with a pause on the rates. This is not to say that they're going to pause the rates permanently. Of course, the Bank of Canada is always really vague, and it's kind of their job to be vague. We can't really predict the future. They only know what they're going to do. But as is, the rates are going to remain at their current levels, which is 5%. So this might have an unforeseen impact on the market going forward. And what is that unforeseen impact? Well, at a general level, I do believe this is going to stimulate the market further. Now, let me be very, very clear and to say that I don't believe the market is going to turn into a seller's market again. I don't think the market is going to get super hot or super crazy. However, I'm confident to say that when we take a look at September numbers, particularly having to do with supply and sales, will be much stronger than August. That is a roundabout way of saying that I believe more inventory is going to come on the market in September of 2023 compared to August, the month we just covered. And then we're going to see more transactions happening. Now, what the impact will be exactly on prices, it is very hard to predict, and that's not my job. I'm not a forecaster of prices. However, I do believe that the diminishing effects of higher rates will still be in place, but at the same time, there's going to be more certainty on the behalf of buyers, and this might actually improve a lot of sellers' outlooks on the market. So they might be more likely to come on market. I wouldn't be surprised if we see prices go up, but I would surely be surprised if we see prices go up to a significant degree. Now, keep in mind, the next time the Bank of Canada is going to meet is in October, and the time after that is in December. So it can easily be the case that the Bank of Canada will actually increase interest rates one more time, either in October or December. Of course, a lot of that is dependent on the CPI. When the CPI comes out for August, we'll see how it was. Nonetheless, though, this is not to say what should have been done this morning. This is just simply to say, based upon the fact that the Bank of Canada did not increase rates, I expect the market to warm up a little bit. Once again, I want to be very clear and to say that I don't think we're going to see prices rebound, not to even the extent of we saw in April or May, nowhere close. Perhaps if prices will rebound, they'll rebound to the same extent we saw in July and June. Of course, every area is different, every property type is different, and today's video is a general market report, and this is a general market prediction. For more in-depth and detailed analysis for specific communities, specific areas, feel free to once again join my WhatsApp group chat or subscribe for more videos here, or find my other content on other social media platforms. And always do not be afraid to get in touch with me to ask any further questions you may have. As always, this is Sam from SaberiSixRealEstate. Thank you very much for watching. Stay safe and stay tuned. Thank you.